heads up that it is now widely expected that the Federal Reserve is going to cut interest rates in September. Okay, so what does this mean? This means that an easier monetary policy is on its way and more inflation. So I'm just trying to be honest. So this is, I mean, you can consider this a good thing if you already own assets, but from the cost of living perspective, it's just going to get worse. Cost of living is just going to get worse. Now, I want you to take a look at this. So this is wild. So this is coming from the CME Fed Watch tool. There is now a 94.9% chance that the Federal Reserve will cut interest rates at their next meeting on September 17th.
I think they were saying like because it's the Federal Reserve's job to protect the economy at all costs. So now he has to lower interest rates because that's just like his mandate or whatever. But I still feel like this was all fabricated because, dude, they probably should have cut interest rates like 6 months ago. So I guess what this means is he's going to be forced to cut interest rates.
Okay, so how did this happen? Like, how did the probability just shoot up this high? Okay, so if you didn't know, it was clearly because of the jobs report that was released on August 1st, and that was a disaster of a report. So I want to tell you how this, these results tie into the Federal Reserve and the expectation of the major expectation of a rate cut for September. So this is what happened. In May, the government said that the labor market added 144,000 jobs, and that was revised down to 19,000. In June, the government said that the labor market added 147,000 jobs, and that was revised down to 14,000. And for July, the expectation was that the labor market would add 120,000 jobs, and it only added 73,000. And I'm just speaking honestly, like I wouldn't be surprised to see that get revised down from the 73,000 jobs added to even negative 120,000. Like that's completely possible. Okay, so the situation was such a disaster that President Trump immediately fired the Bureau of Labor Statistics commissioner that's in charge of overseeing this reports. Okay, now President Trump has constantly been urging the Federal Reserve to cut interest rates. Like, that's no secret.
You know what I love too? For one, I guess it's not toxic, but it is kind of toxic when your president is on Twitter. I don't know, I doubt he's making these posts. But either way, it's funny because on one hand, there's people saying, don't cut the interest rates, blah, blah. It's like yin and yang, right? If somebody's arguing something, there needs to be an opposing side. It can't just be, well, I mean, it could just be, let's live a good life, guys. Let's really figure this out. Let's do it. But for these people, they need an opposing side so they can pin everybody against each other.
But Jay Powell, who's the chair of the Federal Reserve, refuses to cut interest rates. So Powell's saying that if they start to cut interest rates too early, then that may reaccelerate inflation. So that's his biggest fear. So Powell's saying that we can afford to take a wait-and-see approach because the labor market is still solid. However, we got this jobs report and it showed that the labor market is not solid, as a matter of fact. So essentially, that's what's going on. People are looking at this jobs report and that's their interpretation. They're saying, well, maybe we cannot afford to take a wait-and-see approach anymore because these high interest rates, they're choking the economy, especially the labor markets. Okay, so here's how things have changed. Before the jobs report, there was a 40...
That is ridiculous. But at the same time, if you go from 100,000 plus jobs to like 33,000, dude, that's a huge revision. That's what I'm saying. I think we're coming to the point where nobody believes this crap anymore. And it's like, dude, I don't know, man. I'm feeling a universal basic income. I don't know how that would work, but I really do.
1.3% chance that they're going to cut interest rates in September. Immediately after the awful results of the jobs report, which was released on August 1st, the odds of an interest rate cut in September jumped up from that 41.3% to 82.8%. So it almost doubled. And right now, the odds of a September rate cut, they've gone up even further, even higher, to a 94.9% chance. So that is a very high expectation. Now, I just want to say, here's the problem. Because the Federal Reserve, they know that they have not won the war against inflation. So they've been trying to get inflation down to 2%, and their preferred measure of inflation is core PCE inflation. Right now, that's at 2.8%. And take a look at the chart. It's stalled there for more than a year. And another thing is that the tariffs are expected to accelerate the rate of inflation over the coming months. I mean, if you've been watching the Federal Reserve, the FOMC, I mean, you've heard Powell say that multiple times. So this is a problem. Okay, so it's a problem because if you have inflation running above targets and it's about to heat up, then those are reasons to not cut interest rates. But if you have
Yeah, it's a weird, I don't know why they create scenarios like this. They create scenarios where basically it's a catch-22. And basically their job is to like, basically, I don't know, calm whatever is popping up or blah, blah, blah. It's just like, dude, it's so artificial, dude. So yeah, we will see, if you're in the crypto market, we will see boom. If you're in the stock market, we will see boom. There has been major boom. I'll be honest, I've made guapanese the past couple days with specifically some of my crypto. I haven't sold yet because now I'm curious. I'm like, well, if they have to cut interest rates, I was gonna sell. At least I know that's crazy to sell before the bull run, but I have my own goals and my own soul. But I'm really thinking about holding on because it seems we're here, man.
have a weakening labor markets, then that's a reason to cut interest rates. So that's a tough spot. So what is the Federal Reserve going to do? Now, looking back at the FOMC, Powell was actually asked about what's it going to take for you to cut interest rates, and I want to show you how Powell responded.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in before the next meeting. Will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
He literally said nothing. He basically said, we'll wait and see. Bro, how do we have this dude in this? I know why he's not saying anything, because if anything goes left, he doesn't want to be held responsible. But dude, this is cringe at this point. Like, I don't understand. Well, I do understand. The truth is, they don't want people to make money. As crazy as that sounds, it's not even the companies and governments. They're already making money. They don't want the American people to have any money because they're scumbags.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down closer to 2?
We'll look at everything. It's, as I mentioned, a pretty reasonable base case is that this will be a one-time price increase. And in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Okay, so the next Federal Reserve meeting is going to take place on September 17th. And Powell says that he's going to be looking at the totality of the evidence, or basically all the data. So he's still going to get another round of labor market data, the August report in September, and another round of PC inflation. But for the jobs, I don't think it's going to be a surprise to anyone to see that the labor market's going to weaken even further in the next report. Okay, but let's think this through. So how can Powell justify an interest rate cuts if you have a weak labor markets, which you want to cut, but high inflation, which you don't want to cut? I think the only way that Powell can play this off is if he says this high inflation, it's coming from the tariffs, but the tariffs are going to cause a one-time increase in inflation. It's not going to be an ongoing thing. I think that's the only way that Powell will be able to play this off and justify an interest rate cut. Okay, but then you have people making the case that there's still the possibility that the Federal Reserve will not cut interest rates in September. So the reason is, well, their argument is because yes, the jobs created, like the quantity of jobs created, that's falling rapidly. Like there's no one denying that. But the unemployment rate, it ticked up by only 0.1%, only ticked up to 4.2%. And Powell did say that the most important number to look at in the jobs report is going to be the unemployment rate. So please take a look.
On labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
You know, the main number you have to look at now is the unemployment rate, because if it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number.
Now, something else that I want you to keep in mind is that 2 Fed governors dissented at the last meeting. So essentially, the Fed committee decided to not cut interest rates, right? And then Fed Governor Waller and Vice Chair Michelle Bowman voted to cut interest rates. So last time the 2 Fed board governors dissented was more than 3 decades ago. So even within the Fed, there are calls to cut rates. So to be fair, these 2 governors were appointed by President Trump, but regardless, there was dissent. So from within the Fed, there is pressure to start cutting rates. Another thing that I want you to note is that this September meeting is going to be a really important one, because you have to remember that in September, they're going to update their forecasts. So last time in June, the Federal Reserve predicted 2 more interest rate cuts for the rest of this year. If they keep it at 2 rate cuts for the remainder of this year, that means that okay, if they cut in September, then they're going to have to cut again very soon, either in October or in December. So I just want you to know that there is a big market expectation for the Federal Reserve to cut interest rates at their next meeting in September. So I'm going to keep you updated on this whole situation. Thank you for the support.
I believe they will cut interest rates. Maybe they'll hold off in October and maybe cut again in December. If they take the option of cutting in October and December, dude, I don't know, bro. Like, I'm gonna be real with you. We could say whatever's gonna happen and what have you, but basically whatever caused the most damage to the economy, that's what they're gonna go with. So, I don't know, man. It's all fake. It's all AI, artificial. That's why it doesn't mean anything. If you're in the markets, we should be making money pretty soon. Things should be looking good. But besides that, I don't know. Fire Jerome. Peace.